And thanks very much for having me on the show. My name is Chris Stevens. I'm the CEO and Executive Director of Coda Minerals Limited. We're a Perth-based company focused on copper exploration. We've got a copper-cobalt-silver project in South Australia, just next door to Carrapateena, about 6 hours drive north of Adelaide. Over 1 million tonnes of contained copper equivalent in JORC indicator resources now, and advancing well into PFS. So delighted to be on here, and thanks for having me to come and talk about the story and talk about some of the next steps as well.
Okay, Chris, good to see you again. So it's been a while, but it was time for catch up. I think copper's going on a bit of a tear. Why not? And I think silver, people are a little bit excited about recent price gains. Why don't we start off with the kind of recent news? You've kind of put something out which talks about obviously improved recoveries. That'd be a good place to start.
Yeah, so we put out some recent news last week. That was talking about improved recoveries of copper and silver. So I mean, I've been involved with this project now for getting on 7-8 years, and one of the first things I looked at with these open pits, MG14 and Windabout combined, there's about 250,000 tonnes of contained copper, so it's a decent scale. But we were always looking for more, and we found we've quadrupled the resources on the tenure. The recoveries from Windabout in particular have always been on the lower side. I think they were 55% when we got involved, which does not a project make. With some hard work and a lot of science, we've got those up to about 75-78% out of Windabout with flotation work. And then Emmy Bluff sort of around about 82% recoveries. So good, comparable, but certainly room for improvement. And I'm a big fan of improving recoveries because it's effectively free money. So we've done an enormous amount of work on this. Our last scoping study, so the most recent one, was based on some pretty material increases to those recoveries. But we started working on some whole ore leaching. Whole ore leaching is an obvious thing to do. We've tried it before. We couldn't get ammonia to catalyze the copper in the way that it needs to. We finally cracked it. So we've got 95+% recoveries from an ammonium chloride leach, which is commonly used in Australia, around the world, in copper and nickel ores as well. And so this is really exciting news. It's a pathway to some really interesting next steps as well. So obviously big improvement in recoveries. That's a huge potential improvement in revenue over life of mine. We're just doing the calculations right now. And then with that, it also offers some fast startup options because it means those open pits suddenly become more accessible. You're getting more of them as well. And of course, copper and silver, two commodities that are absolutely on a tear. As we speak, there's a whole bunch of work on the cobalt as well. I'm happy to talk to the cobalt, but that's always been the most well-behaved of our commodities, always the highest recoveries as well. So yeah, really exciting news. There's definitely a bit of work, but yeah, potentially game-changing. Worst case scenario, we've still got a flow sheet which is now very well understood, very well peer-reviewed, and provides economics based on the existing flow sheet that are very comparable with peers that are currently doing very well, some of them under takeover as we speak.
Well, I guess what I'm trying to work out here is there's a sort of disconnect for you guys in terms of what you've got and how it compares to some of your peers. You just mentioned peers there, and I want to get into that in a second. But I'm kind of more interested in like the process that you will be engaging in to kind of drive that valuation, because we're kind of not seeing it at the moment. I mean, how do you think people in Australia are actually valuing companies, and why they're not looking at you that way?
Yeah, I mean, it's an interesting one. We've been through the story a little bit before. In 2021, we hit an IOCG in the basement. So South Australia is most famous for this iron oxide copper gold style of mineralization. I can go into all sorts of differences between IOCG and sedimentary and these things, but the reality is there's two types of mineralization that occurs on our tenure. We have both, and the deeper mineralization looked very exciting in 2021. It's unfinished business. It sent our share price to the moon. Unfortunately, it did mean we had a pretty heavy institutional sell down, and once you're in the sin bin, it can be a little bit difficult to get out. But I think the statute of limitations on that one has passed to quite a large extent. We're now in a new world. We're now looking at changes in copper. We're now looking at our main project, so not the ICG, but the shallower, the 3 open pits, and then the shallower underground. It's only at 400 meters, and that combines to over 1 million tons contained copper, primarily about 93% in JORC indicated resources. And we've got a scoping study over it. We've got economics, so $802 million NPV post-tax, 1.2 billion if you like to talk pre-tax, IRR about 35%. Really strong economics. They are very comparable to peers, and I'll talk to that in a minute. So that process for getting out, I mean, we are at that stage in development. Scoping study, well done, upgraded a couple of times, now very comparable, very compelling. But we are at the absolute nadir of the Lassonde curve. It's called, what do they call, the orphan periods, the valley of death. And, I think I talked in the last one, we'd done some research looking at what drives companies' valuations. And, everyone says, look, drilling drives a valuation. Well, of course it does, because if you don't drill and you don't define a deposit, then you're not got anything. But beyond some of the more sort of, I guess, speculative side of the investment, once you've got something, once you define something, this is over 1 million tons in JORC indicated. What actually drives the share price? Well, we looked at a whole bunch of companies last year between the RIU Sydney conferences. And, of the 11 that did more than 100% return on the money, all but 2 of them were driven by feasibility results. We kind of went, okay, this is really interesting. And we started looking more deeply. So this valley of death is real, right? But companies have to pass through it. There is no way other than through. And I think as an industry, and I think Coda's guilty of this as well, we're really bad at articulating our value proposition. And I think, to be fair, shareholders are not always great at understanding them either. This is very simple. Projects at this stage are heavily discounted. I can name many, many more than just Coda. We have a bit of history with that institutional sell down, which hasn't helped. But we're now seeing companies that have been through it. So 3 companies right now, Rex Minerals taken out fairly recently, about 6-12 months ago, by a major Indonesian group, $380 million. New World Resources, currently in a huge 2-way battle between Camel and Kinterra. Valuation started about 185 million Aussie. It's now, it's gone from 5 cents to 6.2 cents, so now well about 250 million Aussie valuation on, as announced this morning, an off-market takeover. And you've also got Xanadu around a very long time, 20 plus years, challenging project, challenging location, and again getting taken out for about 185 million. What do these projects have in common? They have in common economics, which on an NPV and RR basis and a CapEx basis are extremely comparable to Coda's project, especially New World and Rex. And you've got to be careful with peer comps because not everything is created equal. The Rex is just down the road. Big difference. All 3 of those companies are around nearly 20 years, right? Taken them a long time to get there. Coda's only been around 4. We've done an awful lot in the time that we've been around, but more advanced. I often say on our podcast, time is linear, but that advanced state of being around a long time is approvals in place. PFS done, into the DFS, and I think the guys at New World have done a brilliant job in that regard. Really got things moving after being stalled. That's what we're doing as well. We've only been around 4 years. We're coming out of that valley of death. We're clawing ourselves up with the Lassonde curve, and there is now empirical evidence that companies that are able to do that with credible, solid projects, with comparable NPVs, comparable IRRs, comparable CapExes, are being valued over $200 million. That gives me a lot of pep in my step, to be quite frank. It makes me much more happy to come to work in the morning and put in the hours to get this through. So I feel like I've just said a lot. But yeah, next step is really getting that project moving. And I'm happy to talk in more detail about what our plan is to do that.
Well, yeah, absolutely. But I want to kind of stick with the kind of the commercial investment thesis here. Okay, you've got a project on the previous study suggests 330 million capex. That's quite a ways away from where you are today. It's a good project. Can you explain to people how you kind of build up the case for putting the capital stack together, if you want to go that way, or to kind of drive that, I guess, negotiation and give yourself, the ability to negotiate on valuation with whoever kind of steps in and maybe wants to use their balance sheet to build this thing out?
Yeah, I mean, I've spent a lot of time talking to the kind of groups that acquire these projects, kind of groups that build these projects, whether it's with partnership with companies like us or they're just a straight takeout. And I think as a board, we're very commercial, we're very open to discussions. It's really this simple. I mean, when you look back at the history of Rex, when they were at a comparable period in their development, they were trading around 3 cents. They got taken out at 28. New World was trading as low as 0.07 of a cent quite recently and did a fairly major raise at 2 cents this calendar year, going for 6.2 and possibly higher. As you advance, as you show and you de-risk the projects become more valuable. And this is a process, and I think shareholders sometimes don't fully appreciate that because, again, we don't always articulate these steps as well as we might, partly because they're complex and maybe sound a little bit boring on a podcast. But the reality is there is a clear set of steps that you take to de-risk the project, and that is what we're doing. And it is going to take us an awful lot less time than it has some of our peers for a couple of reasons. One, I like to think as a team we're really committed and we work really hard. And two, copper is right now on a massive tear, so the funding is starting to become available. The cost of capital is reducing. And look, I totally understand why companies are agreeing on transactions right now. I personally think doing that is maybe leaving a party just as it starts to get exciting with the way that copper's moving. You know what copper's like. It's been 6 months away from a tear for a little while now. This really seems to be starting to happen. So yeah, to my mind, it's a very simple business model. You advance the project, you de-risk it, you increase credibility, and every single group I have spoken to has said, yeah, scoping study projects, you're kind of on your own there, mate. You've got to advance this thing and you've got to do it by hook or by crook. Get the other side of a PFS, yeah, we'll talk. And that's our plan, is get the other side of a PFS, get it done well,
Okay.
de-risk it, show the value.
But tell me how you like. This is all going to be about execution, because I think I've had lots of conversations with where companies they've read the textbook and they've got the theory of it nailed, but I want to look at companies who have the ability to turn that into reality, and I'm interested in the execution skills. So don't tell me you can do it. Just tell me you've done it before, or tell me exactly how you're going to do it maybe going forward. So you talked about your team's ability to move this thing forward into delivering that economic study.
Look, first point about this team, and the average employment tenure at Coda is about 6 years, but we actually worked together in a previous entity as well. So we've worked together a long time. We've been involved with this project a long time. This is a team that has taken, frankly, a bit of a busted project with 2 open pits, turned it into 5 times the resources, taken those resources from early stage pre-JORC to JORC indicated, and then defined not only one flow sheet, which is now well established and peer reviewed, but also with this most recent work with some exciting upside. So that's a cool thing that we've done in this project. You want to talk slightly wider, I'm not going to drone on about the board forever, but Robin, most recent job, was chair of the Gruyere Steering Committee with Gold Fields and Gold Road. Paul on the board of Greatland Gold, right through that listing process and obviously advancing to have their own project. Between these two guys, I think excluding Greatland, they have developed 17 projects over their careers. Colin, our chief geological advisor, very experienced guy, 20 years with Newmont, on the board of Ramelius, has taken, took PT Medeka from a minnow to a multi-billion-dollar project or multi-billion-dollar company. So I have phenomenal supervision, phenomenal support, and these are people who are very involved. They're not your once-a-month directors, I assure you. Me personally, I've been a study manager on several projects. I've also worked extensively in management consulting and project optimization. I'm a financial modeler and economist by background. And again, I have led the team that's developed this right the way through. So I have developed studies. I have taken studies right the way through. My first baby is now being mined, and successfully. And again, I want to see this right. I've had some phenomenal tutors and coaches during my career on this stuff. And I like to think with our board, you've got direct evidence of projects that have been extremely successful, from Paul, who was one, COO of FMG early on, now on the board of Greatland, formerly on the board of Sandfire. You've got Robin, again, Goldfields, Gruyere, BHP. So we've got great people. We've got people who've done this in smaller entities, but people with experience in big entities too. So if there was ever a group of people who can do this, it's us.
Right. What are you going to do precisely? I mean, I want to know precisely leading up to this PFS, because I'm looking for those kind of long poles in the tent, things that are going to take longer to do, are going to be difficult, are out of your control. Because it's going to a positive, copper and silver market. We get that. But doing business in Southern Australia, tell us about that. Tell us about what you're focused on in terms of risk management.
Right. Anyone who works with me knows I have a mantra, which is I want a scope, I want a plan, I want a budget. And we've just put that together. So we've just presented the entire PFS case for the board. We've commenced the PFS, and we've now basically said, right, this is how we finalize it. So some things you have to do, whatever the project, you go right through the whole scope. Specifically to Coda and Elizabeth Creek, what we really need to be focusing on, we're already at JORC indicator. That's a huge win. We need to do more variability work. So we need to do more variability work for testing the metallurgy across primarily the ME Bluff. That's our flagship and main deposit. We need to do a little bit more geotechnical work. We've made some pretty conservative assumptions on the mining. It's underground mining. And so as we do that, we'd like to think with more geotechnical information, we will be able to maybe skinny those support pillars down, maybe get a little bit more of the ore body as we go into that. So variability, met test work, develop the flow sheet, get the final flow sheets, because again, we still have some choices to make on that. So metallurgy, lock down the flow sheet, do the variability work, and then have a final flow sheet to take forward into final PFS. Then you've got the mining engineering, primarily underground. The open pits are fairly simple. MG14 is 14 meters below dune sand. Windabout's a little bit more complex. And again, this new flow sheet may actually mean we can get more of that and optimize it better. That ultimately needs to be re-optimized and then integrated with the mine plan into ME Bluff. ME Bluff underground mining needs that geotechnical work done. And then we need to finalize the plans with how we focus on mechanical cutting versus long hole open stoping. If I was a gambling man, it'll be a hybrid between the two. We've got Mining Plus, best people in this space, brilliant groups worked with them now for years, had this stuff peer reviewed by people who are really looking to break it and haven't broken it. So again, that's a real plus for us. We work with this group. On the wider stuff, so obviously approvals, heritage, all the things that I guess to an extent shareholders forget, but is fundamentally important. I mean, I look at some projects out there that are quite well valued, and I think, how are they going to build that? We're next door to Carrapateena. The BHP haul road goes across our tenure. We have a contractual right to use that. Great. We've got power infrastructure. The first thing, in fact, about an hour ago, I was finally, signing off the next stage of the hydrogeology work. So understanding the water, doing all the planning for the water bores, making sure that we've got a really strong handle on that. And for approvals, you need solid data over, plus year to be able to submit those approvals. So again, getting started on that early stage stuff. We're already doing dust monitoring, all the low cost stuff that needs to be done. Then you get really exciting stuff with the approvals. Now, we are finalising our approval scoping document. South Australia is an amazing place to work. They have a very unusual system there called scoping. Nothing to do with a scoping study. Scoping means that you develop the scope of the approvals for your project, because not every project is created equal. In a lot of places, you've got to do 115 different studies, and you've got to do them all. In South Australia, it's actually an iterative process with the government where you sit down over a period of many months and you work out exactly what you're required to do. We're going to have that done very, very soon. I actually expect by the time this interview will go out, it'll have been submitted and announced. It's not super price sensitive, so if it hasn't, it's not a worry, but I expect it will be. So again, really, really advancing this stuff. Scoping document is a massive piece of work and very, very important because it defines everything you're going to finalise as you go into pepper approvals. Heritage, Coda, very experienced, work with BHP, wonderful people. We've got a long relationship. And again, that side of things, it's a great place to be working. It's generally single-use land. If you look at pictures on our website, you'll see just how remote it is in terms of the style, yet unremote because we're next to the Stuart Highway, we're next to the town of Woomera, we're an hour's drive from the major BHP town of Roxby Downs. So again, it's a weird combination of phenomenally suited to mining whilst being very close to infrastructure. So it's 6 hours drive from Adelaide and 2.5 from Port Augusta.
Okay, just sticking with the kind of scoping assumptions. Since the last study to the upcoming study, how have things changed in terms of diesel, labor, sulfuric acid? I'm trying to work out how are margins being affected by inflationary costs or other kind of financial pressures.
Yeah, I mean, look, these are major inputs. Labor's coming off a bit, which is helpful. Obviously, inflationary pressures in Australia, again, are really easing. We don't have a major sulfuric acid component in this. It's a dolomitic black shale, so it actually consumes acid. So a lot of our flow sheet development has been specifically to avoid things like this. The ammonium chloride is used constantly around the world, and because we're doing that work right now, we're calculating it based on current rates. One of the things I hate to see in juniors at the moment, the Australian FX has been bouncing around. It gets very expensive to be buying anything online, I can tell you. But when you think about buying stuff for a mining project, so I'm seeing some companies just re-optimize their study, going from like 0.7 or 0.68, going down to 0.63 and saying, ta-da, we're suddenly worth an awful lot more, forgetting the fact that all of those tanks and flotation cells and ball mills are coming from overseas. So that's an interesting one. We don't play those games, so we're still using 0.68. That's what everything was calculated at to acquire it, as well as calculating the revenue. When we do our PFS, we'll obviously do that and recalculate everything at sensible long-term pricing. So those are big advantages in terms of, I think, the way we approach things and try and approach things very honestly. We are using real cost escalations in our models where appropriate. But yeah, some costs are easing. It'll be interesting to see, obviously, as you come into a copper boom, things start to get more expensive. South Australia, there's not a lot of competing projects. We've got Barton Gold. Obviously, you've got BHP, which is very well established, but it won't be like trying to develop, an iron ore in the Pilbara in 2007, for example. So again, major advantage. I think one of the reasons you haven't seen copper move quite so much in terms of some of the share prices is people are aware that, look, it's gone from 8 to 9, but also so are the costs. We're now going from 9 to 10 and plus 10. The copper price is starting to move an awful lot faster than the costs are rising, and say some of those costs are coming off.
And where are the kind of big savings? You talk about optimization here, as you should, right? Going from whole ore leach to or from to whole ore leach versus Albion, etc. Those feel like they should be big gains, or is it just a case of lots of small, finessing of lots of variables here that's going to do it for you? And if so, what's the best use of your time, best use of the team's time and efforts in terms of driving that valuation rather than just eking out these sort of minutiae of changes to the bottom line?
Yeah, so one of the things that I think pleases our auditors and our board, but is if you walk into Coda, the cash flow burn downs are done and always up to date. So we look at the impact of every decision on, one, our ability to keep spending money and protecting the assets, and two, in terms of return, you've got 3 WA School of Mines trained mineral economists in a very small office. And so generally, as a rule of thumb, I want to see $100 million return for every $100,000 that's spent in terms of potential impact on the project. So I'll be the first to admit, we undercooked the first scoping study. There is no doubt it was a little bit unimpressive. And that was done because we hadn't done enough mining engineering work. We hadn't done enough optimization work. We've gone from 570 pre-tax estimate to 1.2 billion through hard yards and focusing on the right stuff. Now, why did we undercook it? Because the share price was getting sold down off the back of the IOCG results. We're not the first project, not the first company to have a project that geologically didn't go so well, acquire a second project, in our case, focus on the second project that happened to be on the same tenure, even better, you didn't have to acquire it, and then for that to go phenomenally well. We probably got those results out a bit early. I'll be the first to take that on the chin. But we have done so much work since that. It's been a 2-year process. As to the next ones, look, I think we've probably gone most of the way we're going to go with flotation, right? It's got the results it's got. The NPV is peer comparable. Look it up. There are rules around making comparisons on the ASX, for example, but shareholders are free to kind of say, okay, what are peer but more advanced projects kind of worth? What are the kind of projects that are getting acquired and getting developed in the copper worth on an NPV CapEx IRR basis? And you will see, I believe, that on those pure numbers, forecast numbers, that we do hold very well. So now we've got those numbers up to what I call credible, advanceable levels. What's the point of advancing it more? Well, I'm not going to prat around for a year and spend $500,000 trying to squeeze another 1% out of the flotation. The whole ore leach is a big swing, right? You're replacing $175 million of flotation and Albion circuit with poly tanks. Now, you sort of said, what happens when you start doing this? When you do more work, or sometimes, it's just that standard rule that you first look at this and you go, wow, this is a huge, huge gain. The reality is, as you start to do more work, things are never quite as exciting. You don't get that $1 billion change, but we are still talking about massive potential changes. We need to do the work. I'm not even going to start speculating at changes in CapEx and OpEx at this point. But when you look at this from a purely technical point of view, you're removing a very large amount of equipment. You're also opening up what's quite an exciting and interesting startup phases, because when you do your mine plan, you've got to make sure that every ton of ore is effectively profitable. If you can reduce the operating costs, and especially reduce the startup costs with much simpler plants, then that obviously means that you can optimize better in the open pits. So does this mean that there are some really exciting startup options? Yes, I think we're going to have some really interesting choices to make over the next month or two in terms of how we present that, and what that opens up. So again, removing flotation and Albion, it's not necessary. The project is really solid. And one of the challenges when you talk about this is like, look, we're making it better. It makes it sound like it's not already good. This is a big swing. Might be a swing and a miss. It might be a huge swing and a hit. But it is absolutely worth the time and effort to do. You're not going to see us faff around with this for months and months and months. We're getting on the OPEX and CAPEX estimation. Once we've got those numbers, we can plug them into the models. We can make some serious decisions around how we do this. We'll get it out to market, and I'll get on our podcast, I'll get on your interview, and we'll be open and tell you exactly what we think.
Okay, sticking with this kind of valuation thing, your team's ability to access capital or structure capital is going to be really, really important. If you are to build this thing out, you need to kind of put that financing stack together, and you've got to do it in a way which the market will finance, quite frankly, right? You know, in the sense that we've seen some quite creative ways that juniors have had to go out and find financing from unusual sources. Well, unusual in the sense that people didn't do it 3-4 years ago.
Yeah.
Or if you were to make yourself appealing to, you mentioned a couple of peers who've been taken out at significant multiples to where you are at today, and I said I'm sure you'll comp that in different ways, but
yeah,
do you go out and say I'm going to get myself an offtake bit of finance? I am going to look at royalty and streaming, i.e., selling off the kind of future of the company. Some people would argue. I am going to JV with something. You've got to be very careful about the structures that you put together now, because it could maybe damage your ability to bring in a buyer at a future date. So how are you kind of looking at that mix of options in front of you?
Yeah, I don't know if I've said it on these interviews before, but I think if there were more students of history, there's a lot of geologists and engineers in the industry, as there should be, but if there were more people with history degrees, I think we would all do a lot better, because the ability to look at what works and what doesn't, and what other companies have done is a really rare thing that just seems obvious, but very few people do it. So let me talk to that. I split financing into two things, right? Survival financing, which at the moment in this market has been a question that I know you've had on your mind with some of your interviews. We have always been able to raise money from a very loyal shareholder base. I think our engagement, we aim to be the most transparent company on the ASX. And as you say, every couple of weeks, pretty much without fail, we're out there. We're talking to shareholders on our own channels and doing interviews like yours. And we pretty much only do our one and yours. But that's been very strong for us. And again, we have over $4 million in the bank this morning. We asked, and there's 4 full-time members of staff plus a part-time CFO. So our corporate costs are very low. Then you've got advancement funding. Well, with over $4 million in the bank, we can advance a lot of the critical path items well. We're seeing an improvement in the market, and we're seeing a lot more interest in copper companies. Again, with 3 of our peers either been taken out or being taken out in the ASX space, and a lack of really great copper companies out there, I think that's really going to help our valuation enormously. You can be a little bit more creative. So I see this in 3 ways. You've got survival funding, you've got advancement funding, and then you've got development funding. So to talk to sort of advancement funding briefly, you can be a little bit creative at this space. What I think often fails horribly is that sort of traditional partnership, sell down of the project, get a massive deep-pocketed group in that can outspend you. And then your shareholders look at it and go, oh God, all the upside has gone. And now we're going to get outspent and diluted. And then your valuation wanes. And look, it keeps the team in a job and it keeps the project going, but I rarely see great outcomes. It can happen. It absolutely can. But it is hard. And that's something that so far, I very much resisted in terms of an advancement option, partly because, as I say, we have a good cash balance and we're advancing critical path items. So a lot of these things like approvals, which are the big ticket ones, are not actually that expensive. They're just a lot of work for the team. Other options out there, we have looked at things like royalty streaming. One of the cool things is the cobalt. That makes us a critical minerals project. It also gives an advantage to things like looking at selling forwards that. I know I say it a lot, but time is linear. We are working on a lot of these things. And again, while we're doing that, we're also advancing the project. I really like things like, there's a new group out there talking about digital syndicated royalties. This excites me. And I'll tell you why, because I think the future of mining funding, 10 years ago, Bitcoin wasn't really a thing, although I bet we all wish we'd bought some then. Things like that are maturing and changing, and we've seen a lot of changes in that. Some of the tax changes in Australia are egregious and are going to make challenges with funding here for some, especially the early stage explorers, I think a lot more challenging. So the SMSF tax. So what we're seeing now is the evolution of new forms of funding. Now, until now, royalties have only really been available to enormous institutions and family offices. So we're seeing, the potential democratization of that. So that's something we're investigating, and I'm actually pretty excited about those opportunities. And then just use traditional royalties. I mean, again, shareholders don't love royalties, but they should. We've crunched the numbers. We know what a 1% NSR over this project would cost us in terms of an NPV basis. And it's not a lot. And that provides funding at a much less dilatory level. So look, get the share price up, obviously. Continue to work with a loyal shareholder base, obviously. Look at more innovative sources of advancement funding. But in the meantime, we're well funded. We're advancing the project anyway. That's good. Development funding, I know you're going to ask about that, Matt. That's obviously important. I'll say a couple of things. First, when you're much more advanced, I think the potential to then do solid partnership deals make a lot more sense. The private equity groups generally won't touch you this side of a PFS, so you kind of are on your own. And if I was running one of those groups, I'd probably be following the same strategy. So I empathize with it, even if I don't fully agree with this being on this side. But, there's a reason that the three most advanced copper companies are being taken out right now. Rex is gone, New World going, Xanadu going. And that's because they are the most advanced ones. They're not necessarily the ones with the best economics either, by the way. But they are solid projects which have been advanced well. And I think, look, I'd love to be the one that stands down this decline and say I was a part of doing this. But I think the evidence is that copper companies are getting taken out, and shareholders make very good returns. If you were buying into New World at 0.07% or 1 cent when they were at our stage, you're doing pretty well at 6.2. Again, Xanadu over the last few years has gone from about 20 million to 180. Let's get out of copper. Boss Minerals, for example, I was talking to their CEO and saying, look, this is a tough gig. And he's like, yes, Chris, but stick with it, because Boss was 30 million when I came back to the project and got involved. And we've seen that evolution in uranium as well. So look, you can, and again, Boss has proven this, you can get into production. But there's also a very large takeout. And anyone who's been involved in any of those journeys from this kind of scoping stage has done extremely well financially. I think the statistics back it up. Whether you go back and look at those RIU statistics or, the 4 examples I've just quoted, the stats back it up.
It's kind of interesting. I agree with what you just said, actually, by the way. I think it's also quite interesting looking at, and why I talk about money and the different type of money that people have had to go for. And we've seen some extraordinary things like Tether coming in and taking out 50% of Elemental Altus royalties because they want access to actual gold without the mining risk. We've seen a lot of government and EU funds out of Europe, obviously, coming in and picking up critical minerals in the shape of copper projects, and they refer to Troilus in Canada as an example of that. $800 million worth of getting involved. So this genuinely alternative way of looking at finance is going to be so important. But so is the model itself. We've seen a lot of companies. We've got a whiteboard over here, 28 companies, which have had to look at a different way of coming out their project. Sometimes the capex is too big. $1 billion capex, $20 million company. Who's financing that? Not the company. But reducing the capex size, reducing the entry size, but bringing a nearer term revenue story to play dramatically changes the accessible capital market and the cost of money. And I think that's been quite appealing to some. And if I look to the kind of Chilean model for copper companies such as yourself, certainly with the kind of the leaching optionality with oxides, etc., they start much smaller. They get the cash flowing, and then they finance the expansion, etc., etc. So do you think that the narrative into the market about we need a big project out of the gate, is that ebbing? Is that going to make a comeback? I mean, how do you think you could play, or what are the options available to you to come playing it in different ways?
Yeah, I do think it's ebbing, and I think it absolutely has to ebb. I beware of people who stand on stage and talk about 50-year legacy projects. They are either thinking with their ego or they don't understand the time value of money. There's nothing wrong with having a 50-year mine life if your payback period is 2, 3, 4 years, but this is bad thinking. And again, look at Rex and Xanadu. Rex was talking about multi-billion-dollar capexes not long ago. New team came in, completely optimized it. Capex came down south of $1 billion Aussie, and they get taken out for someone who's going, yeah, okay, we can afford to finance that. And again, you look at their market cap; it kind of grew from 20 or 30 up to, well, they got taken out at 380, so it was about half that before they were taken out. You're really going to finance $1 billion off 180 million, and I think New World's in a similar position, about 100 million. They're all in no kind of hidden stuff capex, because everyone talks about one capex or another. New World's about 720 million Aussie with the sustaining and all the stuff in. So how are you going to do that off 100 million market cap? Well, again, you can see there's two companies currently taking them out going, yeah, but an 800 million, $700 million capex is a totally credible amount to build a decent copper project. Payback period is 3 to 4 years. We're happy that, and suddenly you get a huge amount of value coming in for shareholders who invested from that scoping stage forwards. So that's how you make money, right? You asked me a question which I haven't fully answered. It has to die, like this massive multi-billion-dollar thinking. And you can see as management teams have come into those companies and changed that thinking, getting it south of $1 billion has made a lot of sense and has resulted in good commercial outcomes. For us, we're already well south of $1 billion, well south of $1 billion. Peak financing requirement in the most recent scoping study in December 2024 released, was about mid 500, 550, million Aussie. As a peak financing requirement. Startup about 331, about 550 as a total finance requirement. So we're talking half of that. Off the back of that, one of the things that really excites me about the whole leaching, and someone said to me the other day, Coda is catalyst rich. I haven't heard that for a while. It was really nice to hear. And we driving those catalysts with the whole leach, they do open up much smaller startup projects. It's going to be harder to have a small startup project when you still need an Albion plant because they're big old things. But you can scale things with whole ore leach. You don't need to start at 3 million tons per annum. You don't need to start building a decline, which is a material part of that financing requirement. Get in there, make money, and then advance it. Don't trust a project that needs both stages to make money. It's got to live, but get that. But where projects will start making money in stage one, and then you've got the ability to advance it and scale it. Oh yes, that's a good business plan. So, I think people forget that we're actually here to make money for shareholders. There's two ways to do it. Advance it, commercialize it, sell it. Advance it, commercialize it, develop it, and make money from it. Both very valid approaches.
What picture are you going to paint with the next economic study? Because there's a couple of options there, both different, but you can only present one set of options, surely.
We got a bit of work to do. It's not going to take a huge amount of time. Literally spent the last 2 days making sure the team is complete. As I've said, I like a scope, a plan, and a budget. And trust me, we have all three. That creates some great catalysts because there are some questions that are answered, and some of the answers to those questions are potentially very exciting. I'm not going to speculate as to what they are, partly because I don't know. I want to do the work, get that done. What I expect to see is us saying, right, so one of my pet hates is companies that kind of publish a PFS and then say, yeah, but we've still got 2 mining methods and 2 flow sheets. You ain't going to see that from Coda. Stage 1 of a PFS, you basically do your trade-off studies. You do all the work you need to do to say, okay, what is this going to be? Final PFS is, this is what this is going to be at this level of confidence. Your DFS is exactly what is this? Will this be, and how are we going to deliver it? So for PFS, first stage of those trade-offs. So again, what we'll have to present at this stage, I expect, is to say, right, here are two options, here are the relative economics of these options, and here is the plan about how we're going to do those trade-offs, and this is how long it's going to take. And you're not going to have, you're not going to die wondering, trust me. We know what we're doing here.
Okay, and what's the timing on that? Again, remind me.
We haven't put anything out into the market, so look, I'll be a little bit vague, but we are currently doing the CapEx OpEx estimation. So per the last announcement, we're advancing really well. We're talking sort of a month or two, with obviously the caveat that this could take longer, subject to some of the results. PFS plan is about 12 months to delivery. It's going to be a long 12 months, but we'll get it done. I very much believe that, again, when you've got a good plan, scope, and budget, you can deliver on these things. So a few late nights, but that's the plan.
Okay. Well, Chris, I appreciate your time today. Appreciate the kind of conversation around the understanding of this, because it's never an economic project, right? And the focus on that is not lost on me. So appreciate you spending some time on that one as well. And we also need a lot of good copper projects out there. So stay in touch. Let us know how you get on, and we'll speak to you soon. Okay.
Thanks, Matt. Yeah, excited about the next 12 months. It's catalyst rich for the first time in a while, and exciting to be delivering on that.